Welcome to Profiletraders. This is Reza and you're listening to my market analysis for August the 13th. As you can see through the screen here, whenever you have this many profiles fitting inside the screen where you can look across all of them and almost pass an arrow through them and be able to hook them all like a shish kebab, it's usually a sign that you're dealing with a lot of market craziness. And no doubt this market condition is not lacking its own dose of craziness. What we can see, for example, yesterday when we got news of further devaluation of the yuan, we got a very nasty sell-off into the overnight, and then in the morning we got further melt on the downside, only to see it fail to extend the range down, and that caused a complete reversal to the upside. But to be honest with you, not me, and I doubt very little were expecting a full-blown retracement back to the very high. Therefore, the problem with this kind of very severe and deep retracement is that no matter where you pick to sell into resistance, that level gets run over and you get stopped. Then last night, on the back of already this colossal move up, they tried to push it further up, but obviously only the idiot and a donkey brain would go buy 2090 after the move has already been initiated from 2046 parabolically straight to that point. How much more do you think a move can have in it without being exhausted? So the reversal was quite significant in the overnight, and we took a short ride off the open, and I had two targets, 2077 and 2073. Both of them were met. Matter of fact, 73 nailed the very low of the day. And then we have a level of resistance which was 2089, 2092, and that level also nailed the very high of the day. As price is right now in the middle of the day's range, you are in a bracket or a rotational trade again. You want to sell as close as possible to 2087 to 89 and buy support within 2073 to 2070 until one of these two areas decide to break. A break of 2070 to the downside, if it's a successful break and not a fake break, should lead us towards 2060 to 2050-60 on the way down. This whole reversal of the previous overnight move, where we have this little development in the middle of the range, I think will be revisited at some point. And on the upside, if we can clear 2089, then we will be dealing with 2094.5 and then back again for the retest of this recent high of 2102. As for crude, it is still very sick of Ebola, and it is vomiting not only you know what, but also blood, and it's still looking very, very bad, even though that we dropped consolidation down here, didn't amass enough buyers so that we would go and work the upper part of the profile above 42.46, and now we can see that pre-market it has already seen a crash all move to the downside close to 41.3. Now of course, if we look at the daily chart, it looks like, as I said, Ebola. It is absolutely horrible. It's a crash. Until there are no evidences that we are attracting buyers somewhere down here, I guess this down move will continue. And it is definitely a very positive thing for the US because number one, it is taking the inflation pressure off the Fed, and I would not be surprised at all that there is a lot of Fed involvement in this as well. Number two, economically, it's extremely bad for Putin and also for the hardliner mullahs. And also, it cuts a lot of the revenues from ISIS and other groups that are selling illegal oil on the market to finance terrorist activities. So in a way it's good, but for those holding the contracts on the long side, doesn't look good at all. What I would like to see tomorrow, if I come from before the open, I would like to see price trading again inside today's range. If that's the case, it will indicate that potential we have seen some long-term buyer interest during the overnight, and then a retest of the low by the next day will become a potential buy zone for me. But right now it doesn't look good, and right now nothing constructive has been shown on the chart to conclude that we are at the end of the down move. As for now, gold, for a little change, it is looking good. We have had a very nice orderly series of higher high, higher low, indicating a short-term uptrend. Then after the double top up there, the good news is that we did not see a meltdown as we would have usually seen, meaning now that it is now possible that we are forming a pause here for further continuation up. Further continuation up for gold means to me that it needs to go towards 1150, where and only where it will find its very first serious resistance. Between here to 1150, it's nothing. It's nothing. It's a drop in the bucket for how much gold has been punished. So this move, it's early stage move, but it does look healthy, and it should, after pausing here and exiting on the way up, to go reach 1150. Again, this was Reza. Thank you for listening, and talk to you probably the next time tomorrow.